I got 3 questions for you. Say the first thing that comes to mind. Don't think too hard.
All right.
Cool?
Yeah, for sure. Let's get it.
All right. So the first question, what is your favorite branch here at the credit union?
Man, that's a tough one. I gotta go with Whitney, man.
Of
Yeah,
course.
love the hours. Love that we're there all the time. We're one of 5 branches open on Saturdays, so we get to see people that usually are just in and out of the branch. Yeah,
All right. Here's another one. What is your favorite branch here at the credit union that is not your branch, the Whitney branch?
man, I'm gonna go back to my Winterwood people. It's where I started. It's where I got the opportunity to be a part of this credit union, and so it really is the branch that taught me the difference between banks and credit unions. We have a lot of love from our members there, and truly a culture of caring, and so that's they probably get that award right there. Yeah.
Okay, okay. And last question, what's your favorite memory working here at the credit union so far?
There's a couple, but really some of the ones that stick out is having the opportunity to be there for our members when making decisions that are critical to their life, no matter the stages of their life, cycle that they're in. Being a part of that and giving someone solid advice, looking at them in their eyes, building those relationships where they come back grateful, for that advice and those conversations. I think that's my favorite part about it all. Yeah.
Okay. Well, hey, I told you, wasn't that hard. We appreciate your answers. Thank you for being here, and let's get into it. What's going on, y'all? Welcome to the Financial Seeds Podcast, where we believe that financial freedom is built one conversation at a time. I'm your host, JimDre Westbrook, and every week we are here to empower families to go from striving to thriving by having smart, practical money talks. On today's episode, we are here to talk about kids, how they save money and they have it all in their piggy banks, but we want to take it to that next level and establish bank accounts. So, to all the families out there who are ready for that, this episode is for you. Now, before we jump into that, I have an announcement. I have an announcement for everybody who's been rocking with us thus far. We hear all the comments. We appreciate you saying this studio looks very professional. I love it. I can't wait to get a tour inside of it. Well, we made it even better, y'all. So, without further ado, we want to introduce you to our brand new Big Apple. And I'm not talking about the Apple from New York. I'm talking about the Apple right here in the Scott A. Arkill's production studio. You will see it if you haven't seen it already. We are going to reveal it. It is a neon sign, and yeah, let's check it out right now. So, yeah, there it is. Yeah, we want to continue to just make this space as good as it can be. We're very, very appreciative of our just everybody who had something to do with this. I'm my wife, coworkers, EMT, and now you guys. So the fact that you have called for, hey, we want to see more of the studio, well, there you have it. So each episode, you will see the big green apple, right? And we really, really appreciate that from y'all. All right. So we're going to continue the episode now that that announcement is over to introduce someone who I think is the best person that can help us walk out this conversation when it comes to establishing youth accounts. Today's episode, I will have one of my coworkers and dear friends here at the credit union, Mr. Marcos Mata. And he is the branch manager at our Whitney location. Welcome to the podcast, Marcos.
Appreciate being here. Thank you so much for the invite. I gotta say, this is my first time checking out the studio, and it looks great. Love the energy. Love the new sign that you guys got. And I really, really love what you're all about, having those conversations for that financial success. So thank you for the invite.
So, when we're talking about these bank accounts, Marcos, let's start with the why. Why do you feel it's so important for parents to open a bank account for their kids or teens early?
Yeah. The first thing that comes to mind is the relationship building aspect of it. It's teaching your kids, your little ones, hey, this is what banking looks like. This is where banking is today. Banking throughout the years has looked a little differently in everyone's lifestyles. Whether it was, I heard that we don't teach kids anymore how to write checks and
Yeah.
stuff like
Yeah.
that. And so it constantly evolves to keep up with demands. So the younger you can introduce them to your banking, to your financial world, the earlier you can spot on trends and you can teach your kids how to be financially stable, financially successful. And it really all depends at what age, parents are bringing their kids, what activities they'll probably get to do. One of the things we love seeing is, kids that save up their piggy banks. You
Hmm.
mentioned, I think in some of our promotions, we've even given away some piggy
Yeah.
banks. And it's really exciting to see kids bringing it into our branch, setting up whether it's their savings or their savings and their teen or their smart checking. And then the excitement that you see when we walk over to like our coin machine. So I don't know if our audience knows, but our branches have coin machines that don't charge anything. Long gone are the days where you used to roll it, spend time
Yeah.
putting everything, hoping that every one of those rolls was good.
Yep. Yep.
So seeing them go up to the coin machine and dumping their little piggy banks in there, to the family, it's a family event, guessing how much is going to be in there,
Yep.
and even sparking conversations of like, what were you saving for this whole time?
Hmm.
What are your plans for it? How much you think is going to end up here? We love it. It's a buying cycle. It's a generational cycle. Seeing your kids start this early on. Yeah.
Yeah, no, I love that. And I can only imagine, like you said, just, almost gamifying it, like how much is it going to be, and having those conversations on what those families were saving for. So as that event happens, talk to our audience. What's the difference between family saving with piggy banks at home and having that actual account at the credit union?
Yeah. One of the new changes, I guess, if you want to call it, within our generation, is everything going digital, right? And so some of the differences, if you're saving in a piggy bank, it could be hard to keep track of what you're saving for, how much you saved in there. Did a sibling maybe take $1 for school lunch the next day or
Hmm.
whatever it may be? And really just like genuinely moving it to a digital platform or a platform like your local credit union is you get to set savings goals. So I think it was about 2 weeks ago we had a younger one getting ready. It's her first year of high school and she's getting ready to start saving for college. So one of the advantages to moving into a credit union is you have digital resources like keep track of your money, see what avenues your money can grow into. You can also set weekly savings goals. So if you get an allowance or you have a part-time job, checks that your grandparents may be giving you for birthdays or stuff like that, it really allows you to tailor it to what you need and what your financial goals are.
Nice. Yeah, I mean, we're living in, like you said, that digital world. Everything is digital. So I love that point of just, making it relevant. Can you share, and you kind of already touched on this, so I'd love to hear more. Talk to us about a story or an example of how maybe a young member or maybe just a kid whose parents were members, how they benefited from starting early.
Yeah, definitely. We surprisingly have a lot of four-digit members, members that have been with us forever. We've had members that, 2 months after they were born, their membership started here with us thanks
Yeah.
to their grandparents. And one of the beautiful things is seeing the generations come and, seeing, we met this member when they were, a baby. We started their savings. We've talked to them about, how to avoid fees, what to look out for, um, and really just seeing that we can make such an impact and have a relationship with our members is key, right? So we have our members that come to us and say, "Hey, Marcos, we've been here so long. We need help with this, or what do you think about that?" And really just having the relationship built to say, "Hey, we know what kind of member you are. We know what relationship you've kept. It really still is a relationship aspect of it to help give them the right feedback. Um, we have stories that could probably keep us here for days, and I'm blessed to say, in the environment that we live in now, we've been able to help some kids. They thought maybe they were getting a job on Craigslist or something. They
Hmm.
were, came into cash, this $100,000 check, and it's our opportunity to really teach our members, teach them, and have those conversations. Anywhere else you go or anything else you do, it could really hurt relationships. But
Yeah.
I love that aspect of our credit union in general.
Yeah, no, that's really good, and I like how when families are taking that next step, it kind of isn't about just holding money somewhere, right? It's about building relationships, building that financial confidence that can go to almost any aspect of life. You are a real big person when it comes to relationships. I've seen you do that almost better than anybody, when it comes to here in the credit union. So I like that you guys are just giving them those real life habits when it comes to spending and saving. So I want us to kind of pivot a little bit and talk about like the basics of what these accounts could be. There could be teens who are on listening or watching, and you don't necessarily know anything outside of maybe checkings and maybe savings. So I want you to kind of break this thing down for us where what types of accounts are available for kids and teens here at Silver State Schools Credit Union.
Yeah, absolutely a fair question. And probably one of the most common questions we get aside from like, well, what do I need to start this?
Hmm.
It can be broken down essentially into a savings. A savings you can get at any age, whether 2 years old, 3 years old, a month old. We've had parents bring their newborns in to start their savings account.
Nice.
And really that savings is meant to hold there and not really transact upon. So maybe you're saving for field trips, sports, whatever it may be. But it really is your savings is meant to be an account where you're contributing towards a goal that you have, right? And then once you are 10 and up, Silver State Schools of Credit Union actually allows students to open up their smart checking. And so that's the only requirement. We want to make sure you're at least 10 years old, and obviously we want to have a parent or guardian come with you and be a part of that. And so once you come in, depending on what your goals are, is really what we're going to suggest, you know? And from there, that checking would allow you to have a smart card. We have exclusive colors that are just for smart accounts. So their options are a little nicer than. Personally, I have favorites there.
Yeah.
But it really just goes, it's about having the conversation of what their goals are and then suggesting what probably is most appropriate. But I would say under 18, you're starting off with your checking account, learning how to manage it, learning how to, transact upon it, how to budget, how to save. And then after that, a lot of parents think, well, what happens when they're 18? Are they going to start getting fees, or
Hmm.
what happens? And we love seeing that engagement from the parents. The
Yeah.
concern. We have members that still come in and check, because they stayed on their kids' accounts. Their kids are off to college, and how are they doing? Let me deposit some here, and it's awesome to see it. But yeah, after they turn 18, we graduate them to like a my account. So really our relationship banking is about just that, the relationship of it and nurturing them the whole way into that financial success. Yeah.
Cool. No, I love that. And you talked about kind of that next steps of when they graduate. But before that, what do parents need to bring in to establish those that savings or that smart checking account?
Yeah, there's like with any procedural stuff, right? There's different options that they can bring in. For checking, we want them to have their school ID at the very minimum, right? A lot of parents think they have to wait till they go to Nevada, the DMV,
Hmm.
take the picture, get a state ID. No, a school ID for that checking account once they're 10 years old will do. And some parents ask, why do you want to see the school ID, right?
Right.
We want you to empower your kids to be able to walk up to a branch and say, hey, you know what, we're going yard selling, or we need change, or I need to transact on my account so that we can verify really that's who they are when they come in and do transactions, right?
Hmm.
Yes, if you're an overachiever and you have your state ID or your driver's license even, those are welcomed, of course. And then the only other thing we need would be like a social security number so that we can start having that on file. But they're extremely different options. You can come in with birth certificates, that kind of stuff. You can come in with passports. But really, what we see most parents come in with is like the social security card and their school ID. Their school ID so that they can get that checking account. Yeah.
Cool. No, I appreciate that answer. And this is something that we've partnered with Marcos and a lot of different of our coworkers when we do our freshman orientation events, right? They are events that we partner with our different schools here in the Clark County School District, and they allow us to be a part of freshman orientation or freshman welcome day. And, we even get stage time where we can talk and help the students and the parents kind of go to that next level financially. And man, after that happens, it's on, right? Right. We
Yeah.
get a lot of different parents and families just wanting to open those smart accounts for their students. So we appreciate the support that we get from you, everybody else for retail. So shout out retail services, shout out Chris and his team. You guys do an amazing job when it comes to those events with us.
Thank you. Yeah, everyone definitely looks forward to these events. We wake up bright and early and we bring our A game. We talk
Yeah.
to as many people as we can. Yeah,
Oh yeah. Oh yeah. So I love where this conversation is going. I want to talk about responsibility. You kind of started that conversation about, teaching them, what their money goals are, what they want to do. So once that account is open, this question, I guess, is for the parents. How can parents use that as a teaching tool to their kid?
absolutely a great question. It's when you invited me over, same day I had one of our close friends, my wife and I, reached out and said, "Hey, Marcos, he has a 15-year-old daughter, and he says every time I put money in her savings account, it's gone. Like, what do I do? Like, how do we fix that?" And opening up that conversation into more, right? Like, what is this really about?
Hmm.
Is where I invite parents to really be engaged and take that opportunity to mentor and teach their young ones, right? We can all have different parenting styles and different, you had a channel about budgets and how much allowances.
Yep.
So everyone grows up a little different.
Yep.
So those conversations will look different. But really uniquely as to having a piggy bank versus a bank account gives you the opportunity to monitor spending, right? So long gone are the days of like, well, I gave you $40. Where did you spend it? I don't know. Did you
Yeah.
lose it? I don't know.
Hmm.
Yeah, everything's on there, right? And so it gives you opportunities from realizing like, hey, your spending patterns aren't showing this, or maybe you were supposed to be saving for this field trip, but you pulled on it for new shoes. Even down to parents coming in because their kids use their debit cards, parents' debit cards on like video game stuff or
Hmm.
apples or all that kind of stuff. It's like we get to teach them, "Hey, that's mom's money.
Yep.
This is what's gonna be in your pocket, and it's up to you to figure out, what's important in your life." Is this I think they call them like video game add-ons or whatever they
Yeah.
are. You know
Hmm.
what I you know?
Hmm. Hmm.
And so, really, if you only got $20 in your checking, do you really wanna pull from the savings where that's intended for either college,
Yep.
or, sporting events, whatever it may be?
Hmm.
So it allows parents to have that conversation with their kids, identify the trends. Is my kid going to be a window shopper? Is it going to be a spender?
Right.
And then sit them down and welcome to have a conversation, right?
That's good. That's really good. I wish that I had that type of
Yeah.
discussion in my household, which we've already discussed on multiple um, podcast episodes that didn't happen and usually doesn't happen to most folks.
Right.
So that question was to the parents. What about the kids? This question is for them. What advice would you give to help teens to learn to excuse me, to balance spending with saving?
Yeah, absolutely. It goes down to one of the foundational questions of, and you hear it in every financial class, right? Needs versus wants,
Yep.
right? So having that genuine conversation with yourself, with your family on what your goals are, and understanding what a need versus a want is. Whether you're a student that gets allowances every week, and in my family we called it a domingo, a Sunday. Your parents would give you $20 for the week,
Hmm.
whatever it may be. To Are you working through high school? Are you working, are you working at the school cafeteria, whatever it may be? But being genuine versus like what do you need to come out of this account, and what is it really that you're saving for? So be genuine with yourself, set up a plan that's going to work for you. If you know you're going to want to spend, $40 at the movies or whatever it may be, plan for that,
Yep.
that way you're setting yourself up for success, and you don't feel that hurt when you have to touch out of the savings money that you weren't even going to save anyways.
Hmm.
Yeah.
Hmm. No, that's good advice. And to kind of round out this segment, what advice would you suggest for families to introduce concepts like maybe overdraft fees or even credit responsibility?
Yeah, for sure. That's probably the second most asked question is if they don't have enough money, are we gonna get charged a fee, right?
Hmm.
And again, part of the reason I love being here is that relationship aspect of caring for our members, right? No, so our smart products, they're set up to be able to stop that from happening, right? Aside from nobody likes getting a fee, nobody wants fees on their checking account or
Right.
anything like that, right? But more importantly, it's having those conversations at a young age of what the root causes are.
Hmm.
Did we was it a mishap? Did we just not know that maybe we didn't have enough money? Were we just not caring about swiping away? Did we forget to budget, whether you're checking your online banking? Um, but our accounts are set up to give you that leeway and allow a parent to step in and say, hey, had this been the real world, had you been old enough, this is really what that soda from that vending machine would have cost you, you
Uh-huh.
know? Yeah.
Okay. Yeah. No, I think that is very, very helpful because, like you said, if this was the real world, we already know overdraft fees. You can get into a lot of different trouble, but I love all of the teaching points that you listed for our families, for parents, and for kids. Very helpful stuff.
The Financial Seeds podcast is powered by Silver State Schools Credit Union. At Silver State Schools Credit Union, our focus is to provide excellent member service and financial solutions for life. Now is the perfect time to lock in lower payments and more savings with SSSCU's new even lower vehicle loan rates, now starting at just 4.99% annual percentage rate. That's 4.99% APR, available for both purchases and refinancing. Members can drive more and pay less with SSSCU's new lower rate of 4.99% APR. Visit silverstatecu.com/drive to learn more and experience why Silver State Schools Credit Union is banking done better. Silver State Schools Credit Union finances up to 100% of MSRP for new vehicles or the Kelley Blue Book retail value for used vehicles. Additional terms and conditions to qualify. May not be combined with other offers. Rates, terms, and conditions are subject to change without notice. Must be a member to apply. Visit silverstatecu.com for more details.
So we got a couple more questions for you before we wrap things up. These are practical tips for parents and for teens. So, what are your top three practical tips for parents to set up their kids for success with their first account?
Yeah. I would say the first one is make it an activity. Make it make your visit to that credit union something to be stoked and excited about. It's your first account. For many of our young people, it really is something exciting. It's probably one of the first time they're going to sign their name on something
Yeah.
official,
Yeah.
right? And so seeing, we have, the students that want to erase it and try it three more times,
Mm-hmm.
seeing their parents like be able to be involved in that conversation. And, you always hear the mom, are you sure? Because that's what you got to stick with. Not true, not totally true,
Right,
right?
right, right.
But even, I mean, setting up things like your PIN number,
Mm-hmm.
your online banking, downloading the app. We have all types of parents, right?
Yeah.
We have parents that want to show their kid every step of the way, and they allow us to fill in the gaps on maybe some of the teachable moments.
Mm-hmm.
And we have parents that say, "All right, here you go, teach them the ways, teach them how to get onboarded." So that'd be the first one: is make it an activity. It is a proud moment, your first
Mm-hmm.
bank account, your first credit union account, your first debit card,
Yeah.
your first online banking. The second thing would probably be, keep yourself involved, right? We've seen parents where they say, "Well, you're not gonna get a debit card, or you're not gonna get access to this, or maybe you're not allowed to touch that." But stay involved with the process, right? This is the time for them to make their mistakes.
Mm-hmm.
So allow them that room to make one or two mistakes, right?
Yep.
Maybe they went $5 over budget, what they were supposed to spend.
Mm-hmm.
But catching this on now is crucial to having those conversations. Rather do it now than when you're in college. Really,
Yeah.
if you're out of state, you're on your own.
Mm-hmm.
And then the third is probably keep it alive. Everyone has spending needs, right? You got kids that are in sports, kids that got schoolwork, or, you know, whatever activities they have going on, is keep it alive. Whether you're going to the grocery store, hey, if I gave you $100, what would that spending look like today?
Mm-hmm.
If you knew you had this bill due or that bill due, what would that look like? Or let's look through your accounts and determine, reevaluate what was a need versus what was a want. But keep it alive. You'll find different opportunities to keep financial conversations alive. If you're doing chores and you pick up change around, or you empty the little lint basket with all the loose change, saving it to bring it back to deposit or stuff like that. There's
Mm-hmm.
so many ways to keep it alive, but keep them engaged in it. Yeah.
I love it. All this free game. You are dropping gems throughout this thing. Another one for the teens that are listening. What's one thing that they should absolutely know before using their debit card for the first time?
For sure. Definitely the difference between what available balance you have. A lot of our younger teens think that if they have $100 in the savings, it's loaded and ready to go on that debit card, right? I mentioned a little bit about how generations change, and so no, understanding that whatever you're getting ready to spend should be in a checking account. Understanding the ways that you can transfer within your accounts, and really the inner workings of like our mobile app, which you're capable of doing, the transfers, blocking your card. A lot of people don't know that you can block your debit card if you think you lost it at a friend's house or whatever may have happened. But understanding the difference between what's in your checking and what's in your savings, and all the features that come through your mobile app, for sure.
That's good. I like that. And we got one more. Uh, are there any common mistakes families should avoid in this entire process?
I don't know if I would call them mistakes, but I would encourage families to engage their kids in the process. Every once in a while we see a family where they, either mom or dad, they just want to open that account for them. Um, but maybe they're taking away from the young one's experience,
Hmm.
right? And so that's part of the reason why we ask, 10 and up, you have to sign your own name so that they can get that experience as a whole, rather than something kind of given to them, right?
Hmm.
Like, here's your debit card, figure it out. Or
Yeah.
here's, let them see what that process looks like from start to finish. Yeah,
Yeah, no, that's good. You essentially don't want mom and dad overstepping when it comes to that. Like allow the kid to be a kid, but then the almost adult and step up in
exactly.
that way.
Yeah.
I love that. I love that. Well, we have now come to the part of the show. I think this is people's maybe favorite part, where we're going to drop the seeds of wisdom. And today's seed of wisdom is this: opening a bank account isn't just about holding money, it's about holding opportunity. The earlier the kids and teens start with this thing, the sooner they will learn that money isn't just for spending, that it's for saving, that it's for growing, and for giving. Parents, you're just not opening an account, as we've already discussed. You're opening the door to financial independence. So we want you to stay engaged, stay locked in, stay involved, but then also give them that room to maybe make a couple mistakes. Give them that room to feel like a true owner and a true player in this process, and they will essentially win the game. And that's what we want them to do: win that financial game of life and have you almost coach them through as they're playing the game. So I think that's it, man. This was an amazing episode. Want to give just another credit union shout out to Marcos for holding it down here with us, for dropping a lot of financial gems for the entire family to really stay engaged and get in the game when it comes to taking your money from a piggy bank to actually joining a credit union, perhaps this credit union, Silver State Schools Credit Union. So shout out to you again, Marcos.
Thank you.
We really appreciate you for being here. And for everybody else out there, we want you to still be locked in, still be engaged with us. And what does that look like? Continuing to like, comment, subscribe, and share this podcast. We see the views, we see the comments, but we need more comments. So please continue to just support the Financial Seeds podcast. We also want you to, if you're on social media, follow us on all our social media channels. And please continue to keep sharing this podcast, and specifically this episode, with everybody you know. I'm sure you know a young person who has a piggy bank, who is ready to have their own bank account. Well, the time is now, and we want you to share that episode with them and their entire family. Until next time, my name is JimDre, and we want to make sure that you guys keep planting those seeds.
The Financial Seeds podcast is powered by Silver State Schools Credit Union. Hosted by JimDre Westbrook, co-hosted by Brianna Chavez, produced by Leandre Fox, and created in the Scott A.R. Kills production studio. The Financial Seeds podcast is for informational and educational purposes only and is not intended as financial, legal, or tax advice. All opinions expressed are those of the hosts and guests and do not necessarily reflect the views of Silver State Schools Credit Union. Listeners should consult with a qualified financial professional for advice specific to their individual situation.